further here, I want to take a look at some past winners. The idea here again is to learn what it takes for stocks to move, and also some of the characteristics for good stocks just as they begin moving. Now I want to touch on an interesting topic here, and it is the fact that whenever markets are moving higher, there will be leadership in a market. And it's interesting that when market corrects, maybe they go into a bear market, that it is not unusual that the cause of the bear market becomes the new leadership as the market comes back. So interestingly, sometimes you'll notice that what was the reason for this big move becomes the catalyst for the next leg up in the market. And let's take a look at what happened, for example, just for an example here, at the NASDAQ. Of course, we know that the NASDAQ had a tech bubble bust, or is known as the dot-com period here, 2000 to 2002, 2003. So all this is what we call the internet bubble bust right there. Now interestingly, coming off this lows here, I remember trading this area here, and what was really interesting, that the very reason why the market was in this huge bear market 2000 2003 led to some fantastic movers in the dot-com space after that bear market. For example, take a look at this one here, NTES. Coming off the lows of 2000, 2001, 2003s, the stock would move from under $1 here all the way to as high as $17 in almost 9 months, just under 1 year. Amazing move. I mean, anybody would like to have such a screaming stock from under $1 all the way to $16. That's a 17 bagger right there. Unbelievable mover. Now take a look at another one, another internet stock at the time, 2002. Notice how this SOHU, now I remember trading this at an entry point of $1.69. I kid you not, right there was an entry point at $1.69. Stock would go on to move all the way to the 40s. Interestingly, the very thing that was the cause of the market crash in 2000 now was new leadership. Take a look at SINA, breaking out here under $1, $2, moving all the way to $50, all within 1 year. Amazing moves. Take a look at another one, REDF. REDF would make lows here of close to zero and then would be trading at $13 almost a year and a half later. Amazing move. Take a look at another low price stock. Now if you traded this time in the market, you remember all these stocks. These were the leaders of the day right here, trading at about $1 right there, and before you know it, bang, trading at $7.50. Even the bigger cap, large cap names in the space were doing well after the market made lows in 2000, 2002. This is eBay. eBay would break out here from about $15, $16 and would be trading at 57 about under 2 years later. So even the big cap stocks were doing well in the dot-com space. Let me give you one more. So coming off the lows of 2000, 2001, 2002, Amazon would eventually make a low of about $5 and would move all the way to 60. If you are playing a breakout would have been here about 17, and you would have been riding this stock for the next, let's call it, I would call it about under 6 months, actually 6 straight months here, 6 to 9 months, another breakout there, breakout here. So what we are learning here is that just because a sector of the market was the cause for a bear market crash or a bear market move, don't give up on the sectors. Stocks do come back to life. Okay, that's one lesson that we're going to learn from this video. and a lesson I learned in 2002, 2003 when I was trading. Also, you'll notice something else, and I want to touch on this, is as traders we have a tendency of trying to find a nice stock. So we're watching a stock forms a closing weekly high, settles down, and would eventually we want to own the stock when it breaks out. Okay, that's how you play the breakout. You want to enter the stock at the breakout here. But usually that's not what happens. Sometimes, and it's very common, and we're going to see a live example in this video, is a stock would do exactly what you'd like it to do, is rally. So you scan for the stock, wait for it to pull back, and at the next breakout attempt we want to be buyers here at this entry point. So we want to buy the stock right there as it's breaking out. Now what happens is that sometimes stocks don't just do what we want them to do. Stocks will break, and what I'm trying to show you here is that even though they'll come and trade here for many weeks, many months, maybe even years, don't give up. What you need to do is note this new closing high on a weekly basis, so that closing high becomes your trigger point for the next buy point. So down the road, if you ever see a stock break out, so the stock will come here, trade around, and at some point it might have an attempt to break out, fail, and maybe eventually it would come and break out. So once it breaks out, that's your new buy point. So don't give up on stocks just because they failed previously to break out, because you're gonna see that they do come back and eventually break out and move much higher. So be on the lookout for failed breakouts. Set an alert for the new closing highs on a weekly basis. Down the road, if it breaks out, you want to be a buyer, because this period here of readjustment or digestion or preparing for the next leg up could have built in enough energy to completely thrust this stock to unbelievable heights. Okay, so now let's take a look at the home builders. Now, of course, the home builders were the reason for the crash, or at least that's what the market's financial media wants us to believe. So the financial space, the home builders, real estate was leading the market lower here, 2007 to 2009. Now, because I traded that 2001, 2002, 2003 market, I knew that at some point the previous bear market, leaders would become fresh leaders on the way up. So as we began 2012, I let subscribers know that this breakout here by the home builders was one to watch. Why? Because we were breaking out there and breaking out there also on the RSI. So I knew that this could turn into leadership. So what's really interesting, in 2012, which is this period right here, the home builders were the best performing sector in the market. Okay, and I'm proud to say that I let subscribers know that this was an area in the market that they had to take advantage of, and we did go along here, and also many points are along this way. So just because former leaders can become leaders on the way down, and they can also become fresh leadership on the way up. So why don't we take a look at the video I made early on in 2012, which I believe the video was made here in March. I believe the video was made somewhere here, March of 2012. So let's go to the video. Also, I want to point out that in 2012, my stock picks for subscribers, we managed to get 3 of the top 6 performing stocks of 2012. So that's a good return. We managed to pick 3 of the top 6 stocks, and they were Bank of America was one of the top 6 performing stocks in 2012. So was this stock, and so was this one. So these 3 stocks were among the top 6 performing stocks for 2012. Notice this is financial, this is real estate, home building, real estate or home building. So why don't we go to the video where I talk about housing, and I also mention this stock here in that video, and later on I'm going to show you a video for Bank of America, but right now let's go to housing and also where I pick this stock right here. This is Eric Mwatha with Mwatha.com. It is Tuesday, March the 13th, 2012. Let's take a look at two breakout ideas here, and they're in the way of retail, real estate space. Actually, let me begin by going to the XHB, which is let me see whether I can find that here. The XHB, here we go. You look on the weekly here, we are now pushing the RSI above 69.10 on the weekly. You see that we had based here, we made a high, I think the first week of February, somewhere around there, and we've been basing on maybe the first, let's say the first couple of weeks of January, and we had a base that was 1, 2, 3, 4, about 6 weeks, and then we are now following through on this breakout here. So the XHB, you know, defying all odds and continues to push higher. Let's take a look at the XHB, which is now the sector that we are. Again, you see that I spoke about this on my weekend video. You see now we are pushing to levels not seen before the crash of 2008, somewhere around there. So we are back above those levels. We're making 3-year highs. You see that also the RSI is pushing to fresh 3-year highs there, which is the minimum requirement for the ultimate Mwatha breakout. That being the case, we need to find out ideas that can take advantage of that, and the best way for us to do that is to find stocks in that sector, and I have two for you, and they are see whether I can. The first one is PHM, PulteGroup, which is breaking out on a weekly chart. The buy point is at 8.91. 8.91 is your buy point, and you'd like to set a stop somewhere below this level, but 8.91, as long as the stock stays above that. You see that we had a test, the stock moving above 69.10 earlier this year, and then we are now moving back to this 69.10 again level again. In other words, the stock is showing RSI strength, and we see that now the price is also following through. Again, that's your buy point. That's all you need to key in as your buy point, and with a stop after that. Another stock we need to take a look at is SPF, is Standard Pacific Corporation, another real estate play, and you see that we are also, after making a high here first week of February, we've been settling down and now trying to break out on the weekly. Your buy point here on this one is 4.55. So you either pick the PHM or you pick the SPF as your buys, but they both look solid. Should we get would like this one to move above 69.10 to confirm strength, but I think it's going to do that as long as the market stays strong. So you have two ideas there. You go ahead and own one. You don't want to own both of them because they move pretty much step for step. So if you really want to go with the one that's already showing strength, I would go with a PHM, just because the RSI is already trading above 69.10. This is Eric Mwatha with Mwatha.com. As long as the market is holding on to breakout levels, we have to play these breakout stocks. Eric Mwatha with Mwatha.com. Good luck, peace, and blessings. Let's go to a new video that was made October 16th right here of 2012, where we were picking Bank of America as it was preparing itself to break out above this level here. Interestingly enough, take note, I'm gonna just include the entire video. The entire video talks about stocks like make sure I have the right stocks. The video that I'm about to show you also had Citigroup. Why don't I go back? In the same video, I'm going to be talking about Citigroup as it was attempting to break out there and had a nice run. We also mentioned notice that GS was also mentioned in the video as it was attempting to break out there, and since then it's had a nice run. The same video I was telling subscribers to watch the Xlf. Why? Because I could see that it was looking to break out here or above this level, and ever since it broke out it's never looked back. So that was a good pick, good call. I also talk about RDN in the video. Actually had a nice entry point there for RDN, would eventually break out. Now RDN was mentioned again later on here, December 17th, right there at that entry point. So we picked this stock during this breakout here. The initial breakout failed, but I also made another video for the next breakout there, which was this entry point right there. So take a look at RDN video being highlighted at that entry point. Stock has had a nice run since then. This is Eric Mwatha with Mwatha.com. It is October 16th, 2012. We have about almost 3 to 3.5 hours before the market close here, and there's a chart I want to share with you because there's something going on the as far as the financial space is concerned. It could be a game changer and it could be a trap, and I'm gonna show you exactly what I'm looking at because it's really quite simple given where the markets are trading as far as the RSI is concerned. Okay, so here's the story right now. You see, ever since 2008, right there, which corresponds with that area there where we have the 21-month moving average crossing or being undercut by the 10-month moving average. But that area right there, since then the RSI has failed until now. The RSI has not traded above that area. We haven't seen a trade above that area until now. Now this to me is a game changer because it's very simple. Notice the absolute last time the market moved above that area there, which is similar to where we are here. But the last time the market moved above that area was in 2003, and that led to the housing bubble or the housing rally, the financial space rally between 2003 and 2007. This was a huge rally in the marketplace. So let me take all those annotations out, but really it's very simple. If the market moves higher here over the next couple of months, then you want to be long financials. It's very simple because we could be looking at another monthly RSI formation here that could take the market way above the current levels. And it's also very simple from a price perspective because the only way this happens is if the Xlf, the financial space ETF, can hold and stay above 16.38, which is the highest monthly close, going back since 2008, and that monthly close was at the beginning of 2011. So this breakout has to take place on the monthly. The Xlf has to break out above 16.38. If it does, it needs to hold above that. Then the financial stocks are gonna be in play. And so we are gonna go and look at, and to me, let me bring a chart that might be a little bit similar in terms of where we are trading. And I'm gonna bring, let me try the IYR. Let's take a look at the monthly chart. Let's go back and take a look at this from a, let's call it a 6-year monthly chart for the IYR. Remember, the financial, no, the real estate home building sector has been on fire, and that space took off when they broke out on the monthly chart somewhere here, which was that breakout there in beginning of 2010, and they've gradually, very slowly moved up. Okay, but the point of the matter here is they had to break above this level here on the RSI before they could rally. It's pretty much where the XLF is trading. Let's take a look at all-time monthly. What I wanted to show you here is, like the XLF, this is where they broke down right there in 2007, and it's only until there was a breakout here, call it sometime in 2011, which corresponds to this level here, that they took off and the home building real estate space had a nice run. Now let me bring back, see whether I can get this right. Let me bring back the Xlf monthly chart, and what you're seeing again is the same scenario here. Is the only way this thing moves higher if the RSI breaks out there, price breaks out there, and we have a strong looking chart. Let's take a look at the Xlf from a weekly chart, and you see from a weekly chart, this area here with the red line has been an area of resistance. There was a failed breakout there, a breakout attempt there that failed, and so we need to move above 16.21 on a weekly level for this breakout to be in play right there, for that to move to, call it a fresh 52-week high right there. It needs to break out above 16.21, not only break out but hold. So I think the XLF is looking like it wants to move, but it has to break above those monthly and weekly breakout levels. I look at the daily for the XLF, and you'll see that most recently it's formed a double bottom here on the RSI, which corresponds to holding way above, nicely holding above this level here. So one could also say seems to be a formation of a cup handle has been formed, and maybe we get a cup and handle breakout there. So the dailies are not showing any red flags. If anything, they're showing a sign of momentum. So let's take a look at some of the ideas I do have for you as far as this analysis, not long analysis, is concerned. Let's start with the first one, and the first one is really very simple. It says XLF, the one we've been talking about. Why? If it can hold above 16.21 on the weekly chart, which is that close there, this is a 2-year weekly, it needs to hold above 16.21 for that breakout to be in effect, in play, and to be triggered. On a, if you want to look at it from a monthly view, and again, I'm looking at this really from a long-term view. If you want to, this stocks could triple, double in the next 1-2 years, because if that breakout on the monthly is legit, this is a long-term monthly move. Could be a multi-year move. But anyway, XLF needs to break out on the monthly above 16.38, break out and stay above that level for that to trigger a monthly breakout level there. Very simple. I would say the XLF could go to the higher 30s within 1 or 2 years if that breakout stays in play. The next one is a common one, and it is a B of A. Generically, you can say there is a cup handle and maybe a potential breakout down the road. That could be what it's looking at, but I was looking at this one purely from a monthly chart view. And you see from a monthly chart, this is a 3-year monthly chart, we have not traded above these levels on the XLF, on the Bank of America stock, going back a couple of years right there, and we are also very close to 50, so I would like to own it if it can hold above this breakout level. So the buy point for Bank of America is gonna be 9.55. It needs to break out above that and stay above 9.55 on a monthly, and what we'd like to see it move higher eventually for these moving averages to cross over as the momentum picks up. So watch that one. I think it could do well for you. Again, if you give it 1 to 2 years, if the breakout stays above that breakout level, this one could be trading in the mid 20s 1 or 2 years out. BK. Take a look at the next one here. Again, we are looking at this one from a monthly view, and to me it's not a really powerful chart, but if it can hold up, if it holds above that level there, and that's gonna be 23.85, which is that level there. It needs to break out above that level. It's really early on in the game here. This one is not primed to move yet because it does need to move above that level there on the RSI. Reason why I want to watch it here is because it could be moving above 50 on the monthly, which could lead to a strong move. So watch BK, probably one of the weakest ones on this potential watch list that I'm putting up here on this video. Second one is a common name that's been on the news today, and what we are looking at here is, again, on a monthly view. Now remember, let's take a look at a all-time monthly. Citigroup on a split adjusted basis was once trading at 500. It's now trading in the 30s. But what's really interesting here for Citigroup is you can see, as far as the RSI is concerned, stock has not traded above this level going back multi-years. Let me see whether I can draw that again. But the stock has not traded above that level there, going back many years. So to me, that's what you're looking for if you want a long-term buy and hold. On the monthly, the buy point, it needs to break out and stay. It's right now it's above that level, but the buy point for Citigroup is 36.55. 36.55. It needs to stay above that level there, and it's trading above that now, so it needs to hold above that. I think this one at this rate, very early on in the game, it's a long-term buy. If the financials are beginning a new chapter in their history here, I think this one could probably drop, but we're talking about $70-80 1-2 years out. That's what I'm looking at there. Let's take a look at another common one here, and it is Goldman Sachs. As you can see, even on the weekly, it's trying to break out here above about 125, but I was looking at these ones again as a long-term view. They're trying to break out above monthly buy point of 123.24. Again, it needs to hold. It's currently trading above that level, needs to stay above that level. Again, not primed to move yet because it does need to be trading above that, very close to doing so. So look, if the financials are going to do well, this name is going to be one of those that's going to do well. It's just one of those names in that space that does well when the financial sector is on a strong move. Let me give you one long-term hold idea, but also on a speculative front, and it is Radian Group, RDN. What I like about it is, one, we seem to be forming a nice cup handle potential breakout coming up. Again, the reason why I like this one is not just it's the price. It's a lower price stock if you want to go that way, but what I like about it is the monthly view. You see, we are just about to breach 50. The last time we moved above 50, it was here, early 2010, and the stock had a chance to move from about, let me call it 7 all the way to 18 in about three months. I'm not saying it has to do that again, but this breakout here on a monthly chart it's probably good for you to own the stock for a couple of months, maybe even 1-2 years. Again, like I said, as a long-term view, the buy point here is going to be 4.34. So as a speculative buy and hold, I would own this one. I say the stock, given 1 or 2 years, could be trading somewhere there, about 16, maybe, let's call it lower double digits, somewhere there in 1 or 2 years. And that's going to be a huge gain percentage wise if that happens. One of the reasons why I like it is because if you take a look at the long-term monthly view, this is one that was at one point trading in the 60s. So quite frankly, it has a long way to go, and we are hoping to see it break out and trade its RSI here to break this. It's been trading in this area for many years, so it needs to trade in this area here and move higher for the breakout to really generate some strong profitable moves. This is Eric Muather with Muather.com. Hope the video is not too long. You got some ideas there, different price levels, but on this video we are trying to concentrate on the financial space. Eric Muather with Muather.com. Peace and blessings. I am out for now. This is Eric Muather with Muather.com. We are looking at a market here that is trading higher for the day. You're looking at the Dow up about 85 points and the Nasdaq very close to a 1% gain for the day. But now this is the one I'm adding today. It is a CNO Financial. I like this one just because it's an early breakout. You want it to move above 9.63. If it can move above 9.63, this one might go on to trade in the 20s sometime next year. It looks good. Just you want it to break out above that level and hold above that level. This is a monthly chart ahead of you that I'm showing here, and I think you see this RSI is going to push, eventually break to new 3-year highs and then move to above 69.10. So take a look at that one. As far as the other technicals are concerned, we already see that, and this is what you want to see. You want to see a stock whose MACD is already at new highs right there, and also MACDs at new highs right here. This is a powerful looking charts. I mean, if they don't work out, that's a different story, but this is what moves stocks. Now here's the video talking about the RDN breakout right there. This was a nice pick. Stock has done well since then. I just put this one here because it's a low price stock. If you want to own a low price stock that hasn't moved yet in the home building sector, you might want to take a look at this one. You know, it's not my best ideas ever, but in a good market, this one trades doubles for you sometime next year. RDN. More here. Tree has been one of our picks. Most recent breakout was here. A stock might look extended, and it could have hit a roof or a ceiling somewhere, but this is exactly what great looking stock charts look like in the market. But for now, I want to pay attention to the powerful sectors, and these are the powerful sectors in the market right now. Home building sector, financial space is breaking out. We gotta pay attention to those. Eric Muather with Muather.com. I apologize for the long video, but lots of things to talk about. Peace and blessings. I am out. Woo! Last on the list is LEN, and I want to talk about this breakout here, which was made August, during this breakout here. August 16th. So during this breakout is when I picked RDN, and we caught part of the move that made this stock one of the best performing stocks for 2013. So let's go to the video. This is Eric Muather with Muather.com. It is August 16th, 2012. Let's take a look at the home builders ETF, the XHB, which seems to be breaking out above 21.78 after it had formed this kind of a base, a consolidation period here. We seem to be definitely working on a follow-through week. Last week we saw it close above this level here, 21.78, and we see that this week as of right now we are following through. That's a strong looking chart. Also notice that the RSI as of right now is showing that we are breaking out of this wedge. You know, you cannot ignore something like that when you see it in the market. You just have to take a serious look at it, because this could be the beginning of a powerful move. Also notice that on the daily you can see clearly this is a breakout right here. I mean, you cannot argue with that. Also seems to me that on the daily RSI there is a breakout right there. So right now everything is clicking here, and if it turns around, that's different. We can't go with that. We can only go with what we see, and what we see right now is a breakout. On the monthly chart, it's absolutely clear that this is almost a 1, 2, 3, 4, 5, 6 month breakout here. 6 month breakout base. Also you see that the RSI is at all-time highs right now, right there, all-time highs, no argument about that. And you see that the MACD is A, close to all-time highs, or B, already at all-time highs. So you take your pick. So that is an absolutely powerful monthly chart. That being the case, we have to go and find stocks in this area here, and I have 3 ideas. Some of them are repeats, you already know about them, but I just want to reiterate them. I'm going to start with LEN, and this is a weekly chart for LEN, which is obviously breaking out here on a weekly chart. But what I liked about this one is the weekly chart looks good. The buy point is about 31.80, somewhere around there. But I like this one mainly from the monthly chart. As you can see, the monthly chart gives you a lower entry point, which would mean a lower failure level. If it breaks down, it needs to move below this level, and this is based on this closing high there a month ago. So that's a breakout right there, and this price here is a 30.87. So 30.87 for LEN on the monthly, which is what I'm showing here. Absolute gem, looks very good. You see that price is already breaking out. The RSI is again back above 69.10. It doesn't get better than that. And you see that the MACDs are also either close to an all-time high or already at an all-time high here. So take a look at LEN with your buy point being 30.87. You want to use a 5 to 8% stop, or at least if it moves back below that buy point, you want to get out. But for now it looks very strong. Let's go to the next one. This one I already talked about, this one I think last week, so you should be aware of this one. Is SPF. Hasn't broken out on a weekly chart. This being a weekly chart, hasn't broken out above 650, which is a weekly buy point. But the monthly is already showing a breakout, and this is what I talked about last week, I think, on the video. And you see that the buy point was here at that closing high, and it is 6.19 is your buy point. And so we are, since that breakout alert I sent you last week, the stock is about that level, still within a buy point. You'd like this RSI to move above, or to move to a 3-year high. It's very close, if not at a 3-year high. And you can see the MACDs are doing exactly what they need to do. So close to a high there, and already at a high here. So needless to say, take a look at SPF. It looks good on a weekly, monthly level. Even the daily should show signs of a breakout. As you can see, the daily showing an RSI breakout here, breaking out of that wedge type formation. So the daily is confirming that SPF was a good pick last week, is a good pick now, and should do well if the market continues moving high. The last one here is a one I talked about last week, again MDC, again in the home building space. And you see that the breakout level is, let's say, about here 33. But what we talked about last week on the video was the weekly buy point, the monthly chart, which shows that former high at 32.41, So right there was a high. Now we are moving about that high. That's a breakout right there. So you want to use this as your entry and support level for now. See whether the stock can move higher for you. What's important here is that the RSI is already at 3-year high. Already at a 3-year high there. So that's powerful move, the most powerful it's been over the last 3 years. And also you see that the MACDs are already at highs here and here. Really powerful looking setup. So take a look at LEN, SPF and MDC, all of them in the home building sector. All these stocks could gain anywhere from 50 to 100% in the next 6 to 9 months. They look very powerful. All we need is a market to stay stable, and these stocks are going to deliver. Eric Muadha with Muadha.com. Good luck, peace, and blessings. Okay guys, so we've learned a few things here. We've seen what makes stocks move. We've also learned the fact that don't give up on a stock just because it was a leader, it was a loser in a bear market, because it could be the next leadership on the way up. We've also seen that just because a stock that was trying to break out fails and moves lower, it doesn't mean that down the road it will not successfully break out. So watch failed breakouts, because they could eventually give you another entry point down the road. And also, more importantly for this video, I wanted to reinforce the idea that the DNA makeup for great winners is the same. It hasn't changed, and I believe will not change. If you know what you're looking for when you're picking great stocks, you just need to know one or two important factors, and once those factors are aligned and if the minimum requirements are met, you're going to be making money. This is Eric Muadha signing off. Just wanted to share with you some of the best picks so we can learn what it takes to have success in the stock market. I am out. Mwah! Peace and blessings.